So can you explain what type of life insurance to get and who through? So there are effectively two types of insurance needs. There are temporary needs and there are permanent needs. Temporary needs are for needs that eventually go away, and permanent needs are for needs that never go away. So 99.9% of people just need a basic term insurance policy because term is to cover off temporary needs. Things like covering a mortgage, income for a spouse, if you have kids at home. Eventually, though, you do become retired and then you no longer have a need for that insurance. So just good, cheap term insurance is all the vast majority of Canadians will ever need. Permanent insurance is for needs that never go away. So things like, terminal taxes and estate taxes, probate fees, passing more money on to the next generation. Primarily, permanent insurance is used when you want to maximize the CDA account inside of a corporation to pass the most amount of money from your corporation on to the next generation. Now, the vast majority of Canadians do not need that type of coverage. It's often sold as like this, be your own banker, the strategy for like leveraging against all these things. And again, the vast majority of people are just going to shoot themselves in the foot by buying it. I spent the first 4 years of my career at one of the largest insurers in Canada. We dealt with probably 4,000 of these policies. We saw all the people who went through class action lawsuits in the 90s who were sold these, permanent insurance schemes. And it's just, I don't really get caught up in it. There are way more effective ways to kind of build wealth. And when it comes to insurance, have a good term policy. If you need permanent insurance from a tax standpoint because you want to maximize the amount of money you're passing on to the next generation, that's when you can use things like min-funded UL policies, or there are different ways to kind of structure things depending on, what age and what stage your life at to maximize the amount of money, again, you're passing on to the next generation. Now, in terms of who to get an insurance policy with, Canada is very, very, very heavily regulated. I would just stick to a AAA rated insurance company. Then the claim is going to get paid out, and that the insurance company has the capital to pay out if and when you pass away. Now, of those AAA rated companies, you just need to be aware that the underwriting departments for each company differ a little bit. And so you want to go to an independent broker who's contracted to a whole bunch of different insurers because certain companies will specialize in insuring different types of individuals. For example, some companies have better rates for people who are diabetic. Some people have better rates for people who have had heart attacks. Some people have better rates for people who have had cancer or, a family history of those types of illnesses. So talk to somebody who actually knows what they're doing. They're not just representing one company because then you're going to get better rates. But again, just stick to well-known AAA rated insurance companies. There's a ton of them in Canada.